Hey, what's going on out there? I would like to welcome every single one of you over to Water Your Soil. So if you're new here, I want to say I have two rules over at this channel. The first rule is for you to always use your own discretion when it comes to credit cards and credit scores. The second rule, that's for you to verify everything that you learn, whether it's here on this channel, another channel, or anywhere. That should be a rule to life. So getting into the video, this video is going to be about some credit card news, and it's bad news, but this news is also news that I've been telling you all is on the horizon. Now, before I get into the news, I want to make a couple of announcements. Number one, the Fed is expected to cut interest rates. So more than likely, while you're watching this video, the Fed has already cut interest rates. So I know some of you are going to be excited and you're probably going to say, hey, this is going to help us when it comes to credit card APRs. But I want you to watch this video in full because it's some important things that I want to reveal to you all regarding that. The second announcement that I wanted to make is Amex is expected to upgrade the Platinum card. I think you all know that. I made a video about a month or so ago stating that they are going to be making changes and upgrading the Platinum card. Well, those changes are expected to come into effect Thursday, September 18th, 2025. So if you are someone who have a Platinum card or you're someone who's considering getting a Platinum card, you want to be on the lookout for that because according to Amex, they say this is their biggest upgrade to the Platinum card ever. And with that annual fee, I expect it to be. But we're not going to waste any further time on announcements. We're going to get right into the credit card news. The way how credit card news works around here is I'll read through the article or I'll read through the important excerpts of the article, but I always leave the link to the article in the description box. That way you all can give it a read yourself. With this article in particular, it's only 3 minutes long, a 3-minute read. So after you're done here with this video, you could go and give the article a read yourself. But make sure that you do hit the like button on this video and you watch this video in full because as I stated, there are some important things that I want to talk about in regards to this article amongst other things. So we're going to get right into it. All right, let's go. It reads, credit scores dip at fastest rate since Great Recession as Americans grapple with student loans and high prices. It says this is the second year in a row that the average credit score has dropped. And this was posted on Yahoo Finance by Sam Gillette. So they have a need to know that's similar to CNBC's key points. So the need to know says the national credit score average dipped by 2 points, the fastest decrease since 2009. The drop is partly because people are now having to navigate student loan payments, which were in forbearance for much of the pandemic. While not everyone is struggling, many Americans are grappling with higher interest rates and higher prices, putting them further into debt. The national average credit score dropped by 2 points in the past year, the fastest decrease since the Great Recession. A new report from FICO, the leading score used by U.S. lenders, revealed that the average credit score decreased from 717 to 715 since 2024. This shift is partly because people are revisiting their federal student loan payments after the pandemic-era forbearance ended in fall 2023. The drop is another noticeable jolt for consumers and lenders alike. Last year, the national average went down by 1 point to 717, breaking a continuous rise over the past 10 years, CNBC previously reported. It says, quote unquote, it's a notable milestone, said Ethan Dornhelm, FICO's vice president of scores and predictive analytics, told the outlet last year. He says this is the first time in well over a decade that the score went down. While the current average score is still quite high compared to the years preceding 2020, it reflects a shift for Americans. More people scored in the lowest and highest ranges compared to 2021, according to FICO. It says, quote unquote, we've seen a K-shaped economy where those with wealth tied to stock market portfolios and rising home values are doing well, and others are struggling with high rates and affordability problems. Tommy Lee, senior director at FICO, told CNN. Young people are being hit the hardest. People of the Gen Z generation are experiencing an average score of 676, 39 points below the 2025 average. Their average credit score drop of 3 points is the largest for any group since 2020, according to FICO. Many young borrowers are being impacted by student loans, which are once again being reflected in credit scores. The student loan delinquency rate is now at a record high, according to the report. More and more borrowers are missing payments on their credit cards, car loans, and personal loans. The delinquency rates for those type of loans are at the highest levels since 2009. Though the rates of people failing to make mortgage and home equity loan payments are at a historic low, FICO reported. Consumers weigh what type of loans they'll prioritize over others, with student loans ranked the lowest, even among high-scoring borrowers, FICO said. Overall, people are feeling the financial pressure of higher prices and higher interest rates, which influences how much debt people have and increases the potential for more missed payments. It says, quote unquote, "I'm not surprised that credit scores are slipping," Matt Scholes, chief credit analyst at LendingTree, told CNBC. It says millions of Americans are struggling mightily in the face of stubborn inflation, high interest rates, a difficult job market, and overall economic uncertainty. And tough times often force tough decisions. In the FICO Economist briefing, Dr. Amy Cruz Cutts shared a similar sentiment. It says, "What lies ahead over the next year is uncertainty," she wrote in the report. But Cutts noted that American consumers are taking important steps to manage their credit. So there you have it. The average FICO credit score has dropped to 715, which is the lowest since 2009. Now you think back, this is 2025, and we think back to 2009 and what was going on in 2009. You figure we were just coming off of a recession that started in 2008. So it's understandable why credit scores were what they were. However, right now in 2025, it's really an iffy period right now. And I'm going to tell you all and explain to you all why. As I stated, if you're watching this video right now, more than likely the Fed has already cut interest rates. At least they were planning to. But most economists are saying that the Fed is going to cut interest rates. So if you're watching this, more than likely you saw the announcement that the Fed did cut interest rates. And that's an issue because what we're going to see is people reach for their credit cards even more now. They've been reaching for their credit cards because they're low on money, because student loans started back up, as the article stated, but they're going to be reaching even more now because some of these prices are going to become more enticing. The reason why they're cutting interest rates is because they want people to spend more. They want to give the economy more of a boost. And honestly, if you follow patterns of the American people, people are more than likely going to spend more, and they're going to use their credit cards because that's one of the main things that people like to reach for. And when that happens, that's going to end up affecting credit scores even more on the back end. So right now, the average credit score is at 715, but I can almost guarantee you that next year that score may be lower than 715. Maybe it'll be at 714 or 713 or maybe even 710. But what's being set up right now is for people to spend more, and people don't have the habit of managing these credit cards correctly. They don't have the habit of paying their statement balance off in full. They look at credit cards like, hey, this is just some extra money that I could use and I could go and spend. So when they go and do that, they're adding to their balance that they already have. And of course, they're going to get hit over the head with interest. Do not think just because they're cutting interest rates that it's going to make your credit card APR breathable. It's not going to make it breathable. It'll make a slight difference, if any, but it's not going to make it breathable. And some of you out there, you may not be aware. You may hear cutting interest rates, so you may say, hey, this will help me when it comes to my credit card and carrying balances and my APR. Well, you're more than likely not going to see that much of a decrease in your APR. And then there's another thing in the article that I wanted to point out. I want to point out the part about Gen Z and the average credit score for Gen Z being in the 600s. That's not good at all. And it's kind of ironic that Gen Z are the least watched viewers on this channel. I barely get any Gen Z viewers, and I pay attention to my analytics, and For the most part, people who watch this channel are either baby boomers, Gen X, or millennials. I rarely get any Gen Z in my analytics, and that's unfortunate because they're going to get a little older and then they're going to realize the importance of credit. But I want you all to start encouraging Gen Z. If you have Gen Z in your family or your kids, whatever it may be, start encouraging them to pay more attention to their credit scores because, as you can see from this article, it's impacting them. These are the FICO numbers and they're in the 600s, and that's not good because they're not even in the upper 600s like a 680 or a 690. They're below that, and that's something that needs to be changed because that's the average, and we know that averages are brought up by the higher score. So imagine what the median is. It's more than likely that the median is much lower than what the average is. So that's something that we need to pay attention to. We got to get Generation Z on board with FICO scores and knowing how to manage these credit cards. It's important. These banks are marketing these credit cards to Generation Z heavily. When they talk about the Amex Platinum card and all of these premium cards, a lot of the marketing is towards Generation Z and of course millennials, but a lot of it is geared and marketed towards Generation Z. And for them to have the lowest average credit score and of course them to be struggling financially, which is understandable why they would be struggling financially because most of them are just starting their career or haven't started their career yet, but you could teach how FICO credit scoring work at pretty much any age. So it's not an age thing. This is just a lack of knowledge, and we got to start spreading knowledge and start paying it forward. But I wanted to read over this article with you all to let you know, like, hey, things aren't looking good. The credit scores are going down. Even though they're talking about cutting interest rates, the credit scores are still going down, and I could see them going down further, and that's not good. But before you leave, I want you to participate in my latest poll. The way you do so is you're going to click on the profile picture you see on this channel. It's going to take you to the homepage of this channel. Once you're on the homepage, you're going to see a section that says post. Be sure to participate in my latest poll and previous poll. You'll see it when you click on post. But anyway, if you're new here and you're feeling the vibe, this is Water Your Soil. Be sure to hit the subscribe button, turn on all notifications, that way you don't miss a future video because I post often. That's clicking on the bell that you see and selecting all. Also, this goes to every single one of you, my subscribers included. Be sure to hit the like button. It literally takes 1 second. It lets the algorithm know you support this video and this channel. I appreciate every single one of you for taking out the time to watch this video, to like this video, to share it, to comment, whatever it may be. I appreciate all of your support. This is Water Your Soil, and I'm out. Hey, what's going on? This is Nell from Water Your Soil. So as someone who went from a 549 credit score all the way up to the 800s, I decided to share the same information that helped me go from poor credit to excellent credit. This book is titled Strategies to Master Credit. I put everything in this book, everything that helped me go from poor credit to excellent credit. All of the information is in this book. So I want you all to purchase this book. A lot of you have already purchased it, but it's available currently right now on Amazon.com and also MasterCreditBook.com. It's titled Strategies to Master Credit. You want this book. It has all the information needed in order for you to go from poor credit to excellent credit or just simply maintain your good or excellent credit score. So get the book ASAP. And if you want something more in depth, you could take the course over at www.wateryoursoil.com. It's more in depth. There are actually chapters in this course, and it walks you through basically how FICO credit scores come about and how they're determined. And really, once you learn how FICO scores come about and the concept of credit scores, then you're pretty much on your way to either going from poor credit to good credit or just maintaining a good or excellent credit score. So if you want something more in depth, I have the course over at www.wateryoursoil.com. All right.